Okay, so let me start the webinar talk today.
Yes, sure. Okay.
Okay, because right now already 2:30. So welcome all participants. Welcome from JABES, from University of Economic Ho Chi Minh City, Vietnam. Let me introduce our famous speaker today webinar. So Professor Wong obtained his PhD from University of Wisconsin-Madison in USA. Currently, he is a chair professor at the Department of Finance, Asia University. He was a full professor at the Department of Economics, Hong Kong Baptist University, and deputy director at Risk Management Institute, National University of Singapore in Taiwan. So very long journey of academic career from Professor Wong. Besides that, he is in the list of top Taiwan economists and Asian economists. He will publish more than 400 papers. He has more than 10,000 citations in Google Scholar, ResearchGate, and Scopus. And actually, he has been serving as editor, advisor, and associate editor for some international journals. Today, we welcome Professor Wong with very academic, also practical story regarding to Bitcoin and gold. So please give a big applause to Professor Wong before he's introducing his topic with us. So now we would like to invite Professor Wong present your topic with the participant in the webinar today. Could you share the slide with us?
Yeah, let me go to the slide.
Yeah, take it easy. We still have time.
Okay, can you see?
Yeah, we see. We can see.
How to make it better.
Yeah, it's okay.
Okay, better now. Okay.
Yeah.
So I think I can start now, right? Okay. So this is a paper I work with my friends, including my Vietnam friend, two Vietnam friend. So three Vietnam friends. Okay. So that good contribution to the paper. Okay. So we work on the goal, and I mean. You may want to learn how to write good paper. So the first one is choose a good topic. Good topic. If you don't have good topic, it's difficult. The second one is get a good tool. You must have some author can handle some some advanced tool. So we developed some of our tool. So and now our author also is an expert in doing the analysis, so that helped a lot. So that's a two issue. So then you can get a good publication. I mean, of course, you write well and write good story. All this is important. So let's start for this. So we talk about the Bitcoin. So we know that Bitcoin is created in 2008. And then after that, the price has been shoot up a lot, shoot up crazy. Then after that is the China and stop, don't allow Bitcoin to trade in China. And there are some other issues. It crashed to 30,000. Now is, I think now even go to 20,000. So it drop a lot. So all this is very serious. Okay. All right. So this is China forbidden Bitcoin to trade. So there's, but still there are many Chinese even they forbid Bitcoin to trade. Still many Chinese are trading Bitcoin. There's a famous guy, Chinese guy. I think he won this not finance, Bitlands, and be famous. So he set up a platform for trading the cryptocurrency, including Bitcoin, and make a lot of money. But recently, I think he lose a lot of money. So I think now is time to restudy the issue because actually we are doing now. We are now restudy the issue because Bitcoin is dropping a lot now. So it's high time to you may use our paper as a base, then including the latest issue. In the Bitcoin drop a lot. You may also analyze the more than the Bitcoin. Maybe you can use this analyze this currency. I think that's is a good topic. It's a very good topic. All right. And in this paper is the 2008. At that time, we just see whether is if we include Bitcoin, can we help to reduce risk, or can Bitcoin help to increase return? Also, we have a couple paper published in gold. So we compare whether Bitcoin is better or gold is better. So I mean, of course, our answer is the Bitcoin is better. So not better, but Bitcoin has some advantage and gold has some other advantage. That's make the story even better. All right. So I don't know whether you want to buy Bitcoin or want to buy gold. But now maybe of course you know Bitcoin dropped so much, we want to buy gold, right? So that's why we study gold. Gold is going up a lot. Going up is we have a couple paper working on gold is doing very well. So gold is a good, definitely a good area to study, right? But Bitcoin and gold is new. That's why we use this to study. All right. We have a long history. I think we skip the literature review. There's a long history review. All right. So in this paper, this is our contribution. We have a case. The case is China forbidden Bitcoin to trade. So then gold is good. Gold is in the Shanghai Gold Exchange, right? And now we have also we consider the stock and bond. So that's our contribution. And now we look into the joint distribution of the using corporate. This corporate is important. Okay. Then we have we also, beside Bitcoin and gold, we also look into the other thing in the stock, the index, stock index, energy, material, industrial, all this stuff thing. In our also the China Asia B share and bond, T bond and the corporate bond. So that make the study more complete. So we look into the chart. So the big goal is stable, stable. But Bitcoin is go up to 18,000 and go down to 6,000. So it's really volatile. Then we have the stock. Stock is relatively stable than Bitcoin, but not so stable as gold. And we have T-bill. T-bill, of course, is stable, going up all the time. So now we have this methodology. So firstly, we build the optimal portfolio of the two assets. We use either Bitcoin or stock, Bitcoin and bond, gold and stock, and gold and bond. And we use mean CVR condition variables, this optimization process. All right. And we also select this best fit corpora, and we study the dependent structure between the two assets in set one. It's a thundering here. I don't know whether you hear the thundering. It's a heavy raining and thundering. And I think make my talk more interesting. Okay, so we have the estimate joint distribution of return by using the best fit corpora. And we also use this other thing. We use VAR, we use expected shortfall, we use short ratio on this thing. All right. So we have some robustness check. Firstly, we check whether it's time varying. Secondly, we check whether it's the data is a frequency matter, really monthly data, daily data is matter. So the third one, we will see whether the currency of Bitcoin price matter. All right. So different currency is it matter? So this is a robustness test. All right. So firstly, we use mean CVAR, variables, conditional variables, and we get this portfolio. So the different, in this portfolio, we found that portfolio one, we have this Bitcoin is the best portfolio. Bitcoin we have 9.2%, gold is 71.8%, and so on and so forth. So we form 16 portfolio. All right. Then we use different corpora. We found the best corpora for this each portfolio. All right. And if you familiar with corpora, this is the formula for corpora. I think I skipped. This is the thing. If you know, I no need me to explain to you. If you don't know, I explain to you also no use. So I skip. All right. So these are findings. So we found that including gold reduce risk of loss and the volatility with low increase of return. So this is good finding, because this is the purpose of the many investor. They want, I mean, of course, everybody want high return, but for the risk averter, they prefer to have, I mean, not so much on the risk. If you want to reduce risk, I think you may want to use a gold as a combination of the portfolio. However, if you use Bitcoin in the portfolio, we found that the loss, the risk is higher, but the return could be higher. All right. That's why we conclude that, I mean, in our portfolio, you can use allow short selling. So price drop is not the main factor. Price drop could be a high return because you can short selling. So that's the important issue. So that's why our conclusion is found that gold is more suitable for risk averter, and Bitcoin is more suitable for risk seeker. And gold is more appropriate for investor in China, because only 9% of the survey investor in middle class accept loss over 15%. That's our conclusion, because they don't accept so much risk. That's why we recommend them to buy gold, not so much on the Bitcoin. All right. So we also do the different sector. And our conclusion is the same for different sector. That's we say, well, our we don't have the seasonal effect. All right. And this result are not applied to bond investor because the optimal weight for gold and Bitcoin gold to include the bond investor is 0. So this conclusion doesn't apply to them. And when you use the swap ratio, then we found that swap ratio of Bitcoin is higher than that of the gold. So this means the Bitcoin perform better. I mean, in terms of swap ratio. Right. So this is our conclusion. Gold can help to reduce risk, while Bitcoin can help to increase the return. So next thing, we want to check the time varying. So we found that this goal is time varying. The result under this optimal weight and dependent structure are time varying. So we found that is time varying. Well, it's expected because it's time varying. Most of the portfolio are time varying. Secondly is monthly frequency. The result of optimal weight and dependent structure change. So, however, the result of gold is suitable for risk averter and Bitcoin is suitable for risk seeker is still true. So it's not so, it's robust for the conclusion. We can conclude that. The third thing is robust price for this RMB, China dollar. So I mean, as this is makes sense because the currency doesn't affect the result. So this, but just for testing, we including this. If anybody want to include this in their study, they may want to follow us for this type testing. All right. So that's a conclusion. We found that if including gold can help reduce risk, but not increase the return significantly. However, including the Bitcoin help increase the return, and but also the risk high risk. So for stock portfolio, diversification with gold is more suitable for risk averter, while diversification for the Bitcoin is more suitable for risk seeker. And for the bond portfolio, it's not so much. Both gold and Bitcoin are no effect because they don't include gold in their portfolio. So, and gold remain the traditional safe haven and hedging assets for the stock portfolio. So that's my talk. Yeah.
Okay. Okay. You already finished your talk?
Yeah, that's all. Yeah, that's my talk. Yeah.
Okay. So now we open our discussion for all participants in the webinar section in this afternoon. So please. Who will go first? So very interesting topic. So at first, I would like to ask you one question. So why China does not allow for people buy officially Bitcoin?
I think it's because too many Chinese buying Bitcoin, so they don't want to get so many Chinese I mean, also because of the risk. So that's why they don't want. I mean, also I mean, is turn out they make a good decision. So that's why if they don't do it now, I think a lot of Chinese are losing a lot of money. So I think they make a good choice. So in I don't know whether they foresee Bitcoin is dropping sharply, but anyway, they make a good decision. That's why I'm not so sure they know Bitcoin will drop. But I think China is very simple. China, that's why my belief. I mean, I may be wrong. So they just try not to. They try to don't want to lose money, because if they lose a lot of money, the people will go for demonstration, all this thing. So it's no good for them. So that's why they just stop doing it. Yeah.
Okay, so Professor Wang, please check your camera. We couldn't see you.
I now checking. I don't know how to.
Because we would like to take a photo during the time.
Yeah. I want to check. See, let me choose. So
yeah. Okay.
Let me see how to get the camera. Okay. Let me see maybe I exit and join again, then I think that's the easy way. Let me see. Let me exit and join again. I think that's could be easier. Okay. Let me see how to exit first.
Okay, we will wait for you. So who would like to give a comment and question? Please raise hand or take a message in the box.
Sorry, sir, can I have a question?
So please wait, Dr. Tuấn Anh, because Professor Wang try to access again in the webinar, because the camera has a problem.
Yes, I see.
Yeah. Okay, I could see you. Yeah, it's already disappeared. Professor Wang.
Okay, can you see me now?
No.
I don't know what's going on. Let me see. Share screen is okay, here. Let me fix it now. See whether I can fix it. I think I do the. Oh, this one.
Is it okay?
Still cannot see me. I can see you, but I can't see you.
Okay, no problem. Okay, but please, Dr. Tuấn Anh, please go ahead to give a question to Professor Wang.
Yeah, but meanwhile, I try to figure out, because I still want to figure out how to do it.
So don't worry, I can see you, but I can hear very clear.
Okay, that's good.
Yes, I would like to thank for your very succinct and interesting presentations. I know this is a very attractive topic because so many study concentrate on these topics. So I have some question. For example, why you choose Bitcoin? How about another cryptocurrency? For example, Ethereum or another kind of Bitcoin, another kind of cryptocurrency. Do they have the same property or the same characteristic as Bitcoin? And here I see the method you use is about coupler, and you combine only two assets at the same time. How about what will happen if we would like to combine more than two, for example, 3 and 4 assets in one portfolio, for example? Can you explain more for that?
Can you tell me the last sentence again?
Yeah, the first.
Yeah, you talk about using only two.
Yeah, I see you combine Bitcoin and gold and Bitcoin and stock, and just you combine two assets together. So
yeah.
If I have more than 2, for example 3, I would like to combine Bitcoin, gold, and stock at the same time. Should we use coupler or another method to check for the relationship or for building the portfolio?
If you use more than 2, I think actually I prefer use more than 2. More than 2. Use more than 2 is better. But then when you use more than 2, there's a problem. We can't. It's difficult to study the joint effect. I mean, I have. You can look into my 2021 paper. I work on the portfolio. So the portfolio is more than 2. It's more than 2. There's I mean, in the paper also 2. Also portfolio. But then in my risk management, you can read my risk management paper. I can send to you my paper. So then I'll send to the host and the paper. Then you can have a look. I think that is handling more than 2 portfolio. More than 2 assets in the portfolio. Yeah. So I hope I can, but the price to pay is then you cannot study the joint effect because it's difficult. I mean, it may be possible, but it's difficult.
Okay, I see. And how about the first question? That should we use another kind of cryptocurrency because we have some more famous.
Okay. Okay. If you want to study this other currency, that's a problem because you can study. I mean, of course, you can include all the currency, the cryptocurrency in the portfolio. That's not a problem. That can be done. It's okay. This can be done. It's not a problem. So in our portfolio, choose gold and Bitcoin, right? You can choose gold and Bitcoin and some other cyber currency. That's not a problem. Yeah, that's not a problem. That can be done.
Yeah. And I see you choose the data periods from 2010 to 2019 before the COVID pandemic. So do you think that this relationship will change with the effect of COVID pandemic?
Can you ask me?
Yeah, I see the periods that you collect data from 2010 to 2019, isn't it?
18.
Okay. Yeah. But how about the newer data, like from 2020 up to now?
Oh yeah, that's good. Extension is good to do.
Yeah.
So
do you think that the result will change?
Yeah, include more data definitely is that's what we are doing now. I mean, I still cannot figure out the video. I have to go bring my camera, bring this to the next time. I better do in my the office. I'm at home. My office, then I can get my computer expert to fix the problem.
Okay,
Yeah,
okay,
yeah.
no, okay, no problem, Professor Wong. Yeah.
Yeah, thank you very much for your discussion. Yeah, thank you again.
Welcome. Welcome.
Yes.
Welcome.
So, Professor Wong, we have one participant raised the question in the chat box. Could you see the red color?
Let me see the chat box.
Okay.
Okay, yeah, no problem. I can see. I tell him. Yeah, I reply to the person already. Yeah. Yeah. Yeah, just I tell him I tell the person to write down the question. So I use the chat box. I tell you the.
No, you can talk to us. You can talk to us. No need to.
Yeah, sure.
Yeah. You can answer directly from your microphone.
Yeah. You are handsome. I'm not handsome, so that suit me is be better.
I think the question regarding to the Ukraine-Russia war and make the Bitcoin prices reduce sharply. I think so, and also the gold and the oil price increases very sharply. So it means that the question can ask you that which factors giving the effect on Bitcoin prices.
I think I keep up, so don't bother the camera. Okay, so you can you tell me your question again?
So I just repeat the question from the note.
Yeah. Oh yeah. Okay, so I can read. The note. So it's very long. When comparing the price fluctuation of gold and Bitcoin, what do you think when gold is commodity that have been prolonged use when Bitcoin is new to invest? The price of gold is more stable than price of Bitcoin, but if the momentum is developed, can the price of Bitcoin be stabilized? Actually, I'm not a Bitcoin favor person. From the beginning, I tell all my friends don't buy Bitcoin, don't buy any cycle currency. So I'm not so sure all my friends follow me. So I think for me, what I think is all the cycle currency, the price will go to zero. Don't buy. Don't buy. Don't listen to me, but guess you can. I mean recording, right? So you can see whether what I say is correct. I predict all the cycle currency, the price of all the cycle currency will drop to zero. So don't buy Bitcoin, buy gold. Okay. So why we study Bitcoin is for research, for getting paper published. But if you want to buy, I don't want to buy. You can. I mean, I know Vietnam, you can buy land because Vietnam probably is going to go crazy, right?
Yeah.
Don't use your money to buy Bitcoin. Use your money to buy land, buy property in Vietnam, and you'll be rich. So that's why I can't. For me, they say the question is, can the price of Bitcoin be stable? I think it will be stable around zero. It will stable around zero. If not, is highly above zero, then not stable because it will drop to zeros one day. So I believe the price will be stable, but stable to close to zero because I'm not a Bitcoin or any cycle currency favor guy. I'm against them because all this thing is don't have the virtual, don't have the real value. To go, you have the real value. You can hold it, you can touch it, right? The Bitcoin is just a record. You can't even touch it, right? So I don't believe Bitcoin. So don't buy Bitcoin. I don't think it's a good buy. Yeah, that's why I can suggest to all of you. Yeah.
Okay. So actually, investor or speculator would like to diversify his or her portfolio, either buying Bitcoin or buying land or buying gold. But my question is that how about the liquidity story beside the return story? So if you compare return story and liquidity story, so which assets we should invest in the future from now?
If you want liquidity, I think is stock definitely a good choice. Now the stock have been dropping a lot. I think it's functioning here, and the stock price have been dropping crazy. So I think it's okay to buy stock. I think now it's okay. But then if the recession, then how you believe the recession? If recession, you think the recession will still going on, more serious, then don't buy now. For me, actually, I buy a lot of stock before last year, and it go up a lot. So I'm a bit too greedy. When go up a lot, I make a lot of money. I don't sell. But I realized that something wrong, so I sold most of my stock 2 months before it crashed. So I'm lucky. I mean, I'm okay. I lose the profit I make. I don't lose money, so it's good. But I sold most of my stock. So it's FANG stock that is highly liquidate. So I can sell in just a second. Just sell most of my stock. So I don't sell in a second, but I sell in a couple of days, most of my stock. So then I'm okay now because I sold most of them. It's liquidized. I mean, this is a good feature for stock. Is you can sell anytime. I think T-bill. I'm not so sure. I didn't buy T-bill before. I think T-bill is not for the layman, for the big investor. So I think it's liquid. Is liquid also. You can sell easily. But stock is easy for the individual. That's what I can say. Gold, I don't know whether it's so easy to sell. I think it's not so easy as stock. Stock is the easier to sell and buy. Yeah.
So it means that Bitcoin is a long-term investment, right?
No. For me, I mean, I tell people not to buy Bitcoin. You can short Bitcoin, but now it's still risky to short because drop a lot already. Don't buy Bitcoin. You can use Bitcoin to do research. Getting paper published is good because Bitcoin is a big story. But don't buy. Listen to me, don't buy. But you may lose money, so don't listen to me. I don't recommend buy Bitcoin. You can buy gold, okay, that's fine.
Okay. Further discussion regarding to Bitcoin that we just in your article you just mentioned about the individual investor, right?
Can you say again because functioning here?
In your presentation today, you just mentioned that the data set you use just from individual information, right? Individual investor, right?
Yeah.
So in other words, I would like to ask you further question regarding to the other kind of investor from investment fund. So how about investment fund? Whether they diversify their investment, not only stock, TB or something like that, but they also buy Bitcoins to become one thing in their portfolio.
For the big fund manager, Yeah, I mean, I'm sure Bitcoin is a good choice for them to long and short. Not only long and short also, because if they think the Bitcoin is, because Bitcoin is volatile. So if they think I mean, they're doing a lot of fun is shorting the cycle currency in a big way. I can find some information to you that there's some fund. They trade Bitcoin because Bitcoin now need to long also to short. Yeah, they do. But for individual, it's not so easy for them to short. So that's why we recommend not to buy. But for the fund manager, they are expert. So I think it's good to include Bitcoin in their trading, long and short. They can short the market and make a lot of money.
Yeah, of course. I agree with that. The final question: if you encourage people buying gold, that safer than Bitcoins. But if we assume that if people spend their money for buying gold, okay, how about the effect of economic development?
I myself don't buy gold because buy gold have a problem. You don't have return. You only have appreciation. For the country, it's good to buy gold. For the country, the exchange of reserve, it's good to buy gold because country can hold. But for individual, you buy gold, you don't have return. You don't have dividend. You buy stock, you have dividend. Every year you have dividend, right? But you buy gold, you don't have dividend. That's a problem. That's if anybody want to buy gold, that's the concern they may want to consider, because there's no dividend.
Because if people buying bonds, buying stock,
bond, you have a bond yield, so
yeah,
it's okay. But for gold, you don't have dividend, you don't have yield.
Yeah, of course. But for the individual buying gold, so he or she can receive the positive effect of anti-inflation.
Yeah, that's a positive. That's the advantage of buying gold. Because gold is value there. I think I invest quite well. So I tell you my investment the philosophy. So for me, I don't hold cash, and I borrow a lot of money. So because I believe inflation is very high. Those are the country and all the country they announce the inflation is doesn't reflect the real inflation rate, and also every country is printing a lot of money. That's why I don't hold money. I borrow a lot of money for investment. So that's why I sell a lot of stock, because I borrow a lot of money to buy stock. But when I smell something wrong, I better sell fast to return all the money to the loan, because I borrow money to buy stock. That's a dangerous game. But that's what I'm doing in the past 30 years, and so far so good, because I catch the blue one, and when anything wrong, I just sell. I don't care, because my money is I borrow money. That's why I only consider the asset have return, and when the fund is the price could drop, I just sell. I don't care, because it's not my money. It's my borrowing money. It's dangerous. So that's advantage of stock. If you buy gold, there's a problem, because you don't have asset, you don't have dividend. That's a problem. So, but it's good for against inflation. But you want against inflation, for me, against inflation, what I do is I borrow money and invest something more than the inflation, more than the bank rate. That's good enough. Let's say I borrow money from the bank, I pay 2%. If I invest in any investment, give me 3%. Don't mention 5%, 10%. Even 3%, I pick 1% every year. It's a very good deal because I borrow $1 billion. So if you 1% of $1 billion is a lot of money. So I look for the stable return, but high return than the bank rate to hedge against inflation. This is a good topic to study. I don't know whether any of you want to join me in this study. This is a really good study in not only for getting paper published, but also for the investment. And that's what I'm doing in the past 30 years. This is you may consider because every country is printing a lot of money. Don't hold so much cash. And you may consider borrow money to US. If you find any investment better than your loan rate. So that's my suggestion.
Okay, very interesting. So other participants in the webinar section in this afternoon having more questions, please.
Next time, I think I go to office to present. Home is a problem, so I can ask my computer expert to help me fix the problem. Sorry, next time I attend your talk, I will go to my office. Okay.
Okay, I think today's I think a very good topics and also very good discussion and also very good question to our speaker, Professor Wong. So on behalf of JABES, belong to University of Economics Ho Chi Minh City, I would like to thank Professor Wong for your presentation and for your discussion today with our participant, and hope to see you in Vietnam and Ho Chi Minh City and especially at our journal office, and also welcome you to the International Conference ACBET 2022 on August. And
okay, yeah, I'll join you.
Yeah. We organize the international conferences by not only in person but also in online platform. So if you have a chance, please join with us, and also you encourage your researchers in Taiwan can join with us.
Okay.
And yeah, beside that, we would like to thank all participants attended in the webinar section in this afternoon today. So hope to see all participants in the next webinar. Thank you very much.
Okay, thank you. Thank you.
Thank you.
Thank you.